before. Thanks for your attendance and thanks for coming along to share to see what we've got going this week. We've had quite the rocky week with things up and down all over the place. During the week, we had Fed Powell speak. Earlier in the week, we've had a few other bits and pieces with the Australian dollar and the cash rate and the RBA holding steady. They did have a little bit of what we call it, heavy weight coming in on them to not cut interest rates, not to be the first country to cut interest rates at the moment. Everybody is looking for a cut in interest rates, obviously, with Powell and his speech saying that there would be no cut in the interest rates. And then he followed that up with a 60 Minutes interview saying that it's not happening until the data gets better. What we have seen during the week, though, that is what has been really, really interesting is some of the rhetoric and the commentary saying, well, what more data does he need? Is he the only one on the Fed committee saying that this is what is needed? Who knows? Obviously, that's all behind closed doors, but the inference is being that there is a start of a bit of a what more does he need to even look at cutting interest rates in March? Now, there was initially a 51% chance of that happening. That has obviously dropped off the books, but let's see what happens going forward in the next couple of months as people sort of say, well, okay, March isn't that far away. And we can look at that going, March really, really isn't that far away. So what we have got tonight is I'm going to give you a rundown on gold and oil. Gold, as you know, is something that I love to trade, but unfortunately, let's just go to the charts and have a little look and see what's going on here. So let's share the screen. Just move me out the way. Share screen. Okay. Here we are. We're going to do a quick technical analysis on gold. As much as I love to trade gold, it's not something I'm loving to trade at the moment, let me tell you. So guys, just bear with me just one moment. Okay, so let's have a look at the gold daily chart. What can I say? Flat as a tack. If we go down here to the ADX is showing me there is no trend. I could have told you that. No trend either direction. The MACD, flat as a tack. We know that we want to see MACDs going in some direction to get some kind of move. We want things trending, but we've got diddly squat happening here actually on the moment on the chart. That's daily chart. Look at that. Nothing. Where we had a pullback last week, which was really unfortunate. Let's just drill down to the 4-hourly chart. Major pullback down on, I think we had, what was it, US job numbers? Was that it? Unemployment change. And obviously US dollar, it was better than expected. Gold pulled back, US dollar went up, and look where we are at the moment. 4-hourly chart for the last 2 weeks. And you can even go back a bit further than that. You are looking at just not going anywhere. It is reacting to some of the news coming out, but when I've got whiplash. I'm thinking, yes, it's off and off it goes, and it's running. And I'll show you a seasonal chart in just a bit. But at the moment, we have got 3 steps forward and 2 steps back, and it is one of the most frustrating 6 weeks I've had in quite some time, because it's not quite where I would like it to be going at this time of year, in an election year, in a presidential election year. We're just missing out completely here, but this is what we've got, and that's just what we've got to work with and be brave. What the chart is telling us, technically, it is moving sideways. It just is moving sideways. It didn't like that, but what is interesting to see is you can see it down through here. It's holding support. Bounces off, holds support, comes up, hits resistance, comes back down again. That is the sum total of the story for gold at the moment. So even if you can set it on a weekly, And it's just abysmal at the moment. Again, we've got flat MACD, we've got an ADX that's telling us there is no trend. Well, no kidding. And whilst the green line, the DI plus, is showing that it should be pushing up, it's just not at the moment. At the moment, we haven't been overtaken by the fact that gold is going down. It is just ranging. It's holding its own above the 20. The blue line here, my blue exponential moving average is my 20. My red is my 50. Gold is 100, and the simple moving average is the green line. And at the moment, they're still in order, but this is a weekly chart telling me that gold is going sideways, when normally on a seasonal chart, it should be going up. What we are looking for is, until the rhetoric changes and the ideas change around whether we are going to get interest rate cuts happening in the next, look, I'm not holding out much hope for March, but possibly May. We might be getting something in May. If interest rates start to charter down, what we're going to see is the bond yields move down as well. And gold and bond yields, particularly 10-year bond yields, are inversely correlated. So if that comes down, we will see gold go up. It's not an inflationary story or anything like that at the moment. That's where we're at. The other thing that is sitting there, just ticking at the back of my mind, is US equities. And we're seeing the S&P blasting along, and I think they revised the Magnificent Seven. Those Magnificent Seven, what have we got? We've got Alphabet, Amazon, Amazon, Apple, Nvidia, Tesla, Microsoft, and I forget the last one. I'm sure there is another one in there. That Magnificent Seven, no, I won't even guess. What we're now looking at is commentary now referring to the Fabulous Four that did really well last week and the week before. That is an opening to actually see money being taken out of other areas and being put into US equities. We have seen for the first time ever a close on the S&P over 5,000. It closed at 5,026. It is blasting along. Not every company on that 500 US 5, the S&P 500 is doing exceptionally well. They're saying it's basically down to 4 companies that is pushing that higher and higher, and probably just it's on a good thing. Let's see how much further it goes. I think it's just bubbling along, going along, and seeing where it goes at the expense of gold and other bits and pieces. So look, guys, that's where I think we are with the gold at the moment. We are just going sideways. I can't even see, even on the monthly, it's saying a bit of a pullback, but hey, all we've done is we're an inside bar on the monthly at the moment. We're a further inside bar from January. And an outside doji. There's no direction. That's nothing to help us on any sort of situation at all. So let's have a quick look at the seasonality. This is what it should be doing for February. Have we got any of that? Diddly squat. We have got none of that. And I have actually not only gone from 25 years, I've gone back down to presidential yearly cycles as well, to be really specific with what I want to see. And that hasn't helped me. So we've got total uncorrelation of seasonality and what is actually happening in the market at the moment for gold. So sadly so, guys, all I can say is we just have to wait and see what happens with gold to get a bit of a direction. So my next one is, just give me 2 ticks, and we'll flop over to oil. Now, oil gives us a little bit more. Sorry, I should have had that ready to go. My oil analysis. Now, oil's been a little bit interesting. It's been one of those things where you sort of think, well, what happens now? We have got, not only do we have excessive fluctuations in oil when the Ukraine-Russian conflict started. We now have the Israeli Gaza Strip conflict going as well. And now we have got UK and US doing airstrikes, and the Red Sea has been closed, and BP is, and a couple of the other oil companies are stopping routes of their tankers through the Red Sea. And then we've got, on top of all of that, the economic situation happening in China. So despite all of that, we've got an interesting scenario where we had, you'd think all those kind of things would actually push oil higher. What has overridden all of that has been an interesting situation, but we'll go through that. But from the technical point of view, oil actually closed sharply up from the downtrend at the beginning of this week. So it had been coming down. It's been all over the place. It, again, like gold, doesn't know quite in which direction it should be going. It's closed at 76.53, so it's up. It's reversed the downtrend, but what is significant is, okay, it's reversed the downtrend, but it's still continuing to trade in a range. It is not going anywhere significant. So if you look on the daily set, and we'll go to that chart in a minute, we saw a really nice, really neat ring low setup on the daily chart, and that commenced this week's rally, taking into account all the geopolitical impacts. And oil, unfortunately, has got it coming at it from all directions. So let's just have a look at the daily chart. Look at the daily chart. I mean, it's a really strong, straight up to the 100 EMA, but we had a really nice, on Tuesday, we had a low test bar. Yes, it was just testing support. And then we had the shoulder bar close above the high of the low test bar. It wasn't a big low test bar because it was still confused at that stage. And then we had this magnificent takeoff. And again, all the geopolitical impacts as they sort of like filter through and how that was absorbed was going right through the market. And we had a really strong takeoff from that low test bar, that ring low just there. Again, it's not the strongest move, and I'll just go through this. This is the ADX, average directional indicator, and that's not telling me until it gets above 25. That is not a strong trend, and you can see there it's just all it's done is gone down, up, down, and up, and straight back into the middle of that range. That is a trading range on the daily. Okay. Yes, it's moved up from the bottom. That's what we can see there, but we can see on the MACD, it's still not significant. It is not a significant move from a technical point of view. Let's drill down. It looks really good, doesn't it? It looks rare. It came through, broke through the, that is my weekly pivot on my 4-hourly chart. So supported, and then all of a sudden it took off and it's decided to go through to R1. That's great. I'm not sure we can say that is the start of a new trend given, let's just go back, given what's happened on the weekly, on the daily chart. Okay, so we've got a break of the monthly bar, of the monthly pivot. Just to make it quite clear, my pivots on my daily compared to my 4-hourly chart, one reflects a monthly pivot. The 4-hourly chart reflects a weekly pivot. I'm looking for a better entry when I'm trading. That's the only reason I've got different time frames. So as you can see on the 4-hourly, yes, it's looking to go further, but again, it moved up, hit resistance, and now it's not too sure what it's going to do. We've got a great big doji, we've got a little bit of a pullback, and that's where it finished at the end of the week. The weekly, again, you can see from the 200, let me just show you that. That's my 200 simple moving average. Again, there's a lot of big hedge fund traders that will say anything above a 200 simple moving average, we go long. Anything below, we go short. here we have it, quite clearly see oil is using the 200 simple moving average as a very neat level of support, and it's bouncing from it because it's not really doing anything. It's not really going in any direction. It is, on the one hand, dealing with what's happening with the biggest country, which is the biggest consumer of oil, China, compared to what is happening with the Middle East. And I was reading reports during the week, and we are seeing a lot of bits and pieces happening that are not necessarily what you would call kosher, as far as Libya selling quite a bit of oil to Russia. Russia is also an importer and exporter of oil. The US is also making and drilling their own oil as well. And they very quietly been doing that under radar. So there's a lot going on, but when the numbers come through, this is what's happening. It's just going sideways. There's no supply and demand that is really taking hold to send it in one direction or the other. And that's, when it comes to commodities, so important. And we are bear in mind, this is the Northern Hemisphere's winter, where you should expect a really strong demand for oil, for heating, for whatever. But normally, this is what we expect to see during in this first quarter, is a push up for oil, and we're just not seeing it. Monthly really tells the story, doesn't it? Everything's flat. I've got flat EMAs. I've got a flat MACD. I've got a sick ADX, and both the DI plus and DI minus directional indicators are pointing down. It doesn't get more bland than that. So between gold and oil, I've had a really, very boring time trading, guys, for the last couple of months, I'm afraid. But this is what we've got. And as you can see, until we get a little bit more of a kick in the pants on oil, or gold for that matter, this is what we're looking at. It's just really flat. So going forward, like I said, seasonality, we should see a bit more of a push up. We haven't, and that's just the way it goes. But, you know, at the moment, we're still looking at Chinese weakness economically. It continues to be a key talking point for the past week. It's been there for some time. They've got some really big issues, and because I keep an eye on what's happening with some of their property companies, some of them are going into bankruptcy, some of them are really struggling, and it's having such a ripple flow-on effect to the rest of the economy. The weakness will continue. The geopolitical risk premium kicked back in with quite a bang after Israel rejected a ceasefire offer in Gaza, and that is one of the things that sort of like popped up oil. It didn't help that they bombed the border city, that it says city, not city, of Rafah, but these are the things that are all coming into the mixing pot. It's trying to find the traction and trying to work out what piece of news, and because it's coming at us thick and fast, by the way, which bit of news is going to be significant enough for us to be able to take a position and interpret the news on this commodity. There was also news out from the US Energy Information Administration saying that its output is unlikely to surpass the current level of 13.3 million barrels per day until early 2025. What that also doesn't say, if you read between the lines, is they're just filling up their reserves at the moment. They've got enough going on. There's other things happening. There's an election. There's a lot of other bits and pieces and spangles and glitter and, I don't know, some football game apparently. And that has taken a lot of heat off what's happening with oil in the US, but that is very quietly. They were very low on US oil reserves at the end of last year, really low, critically low. And they are doing what they can to get that neatly but quietly back up. So where that goes to, I've got two commodities that I'm looking at going sideways for quite some time until I can get a bit more information. We've got an OPEC meeting. Take note on that. That can cause some volatility. Just remember, we are just looking at a ranging market at the moment for both gold and oil. And just to be aware of further volatility. But hopefully things will start to change and we can see what happens very soon. Now, I would love to know, I'm going to finish that. I'm just letting people know. I've got some chat questions here. I am just letting people know that if anybody here is not looking at going to Bali, who's looking at going to Bali? Please tell me. Please tell me you're looking at going to Bali. Who is not coming to Bali they should be going to Bali? Trying to go, family. Oh, Catherine, I'd love to see you there. Bali is looking fantastic, and I'm just going to give it a plug. Not that I was asked to, by the way, but I'm really excited. I'm going to Bali. I am leaving children here on their own. And Kathy Lynn, Paul's been able to get Kathy Lynn to come to Bali. Now, for any of you who don't know Kathy, Kathy is somebody I have been following for about 15 years. She is quite she's one of those just amazing people. She graduated from the Stern School of Business, which is the University of New York, when she was 18. So we're talking about somebody that you should probably sit up and take note of. She's written books. She is in the market day in, day out. She has got an incredible depth of knowledge, and I'm really excited to be seeing her. So, guys, if you are not platinum, would like to be platinum, I think Sam can drop something in the chat box too, or you can contact James during the week and just say, yeah, this is really something I would like to do. Then I suggest you do it, because I'm really looking forward to seeing Kathy in Bali. And obviously there is quite a number of the team. Thank you, Sam. She's got contact to actionstowealth.com. We have got, I think, most of the team coming to, including Uncle Jeff. Uncle Jeff will be there. We've got most of the team coming. I think even Chloe's trying to work out how to get a 3-month-old baby to Bali. She doesn't want to miss out. I mean, we're all so lucky that Paul's been able to secure Kathy to come and speak to us and run the US trading session with Gordon Scott. And we're just really lucky that we've got such a great team available. I'm lucky. I've got access to these guys as well. So yeah, if you haven't, seriously think about it. If not, get in contact, see what you can do. And that's pretty much me over and out for the evening. Happy trading, everybody, for the week. And I look forward to seeing you either in Bali or perhaps in Singapore on the following week. So that's me over and out. Thanks, Catherine. I hope everything works out. Good to see you, and hopefully we can get something